It's physical demand for gold. And markets today are not pricing in anything but, the dove in hand. They want to see the real physical demand materialize. And markets like oil, it's uncertainty around the election, uncertainty around China's stimulus, and you don't see a physical shift. While in gold, retail demand is off the charts, people buying gold because of all these uncertainties we are talking about. ETF demand for gold is off the charts. Central bank demand for gold is off the charts. And as a result, gold, is 27 and change today and, approaching $3,000 an ounce. And I don't see any of these trends fading anytime near future. So I think there's a lot of upside still left to gold. With oil and the rest of the commodity complex, they're being driven by these mega trends, whether it's decarbonization, digitalization, or demographics, that, they're with us regardless of the outcome of the election and regardless of these other uncertainties.
So walk me through that in a little more detail here. When it comes to gold, we don't really know the outcome of the US election yet, but we do have more clarity on what the Fed might do in terms of the reaction function post-election. As for oil, though, we've also had a really interesting moment with OPEC coming forward and delaying this output hike. So what do you think happens in the market for oil next specifically?
Their demand is now beginning to accelerate because of the rate cuts you're talking about. The stimulus, we're seeing some of it. We just won't know the scale of the Chinese stimulus until we see the results of the election. Because, if you are the Chinese policymakers, you need to see what you're reacting to in the U.S. before you announce your stimulus, and then the markets get a clearer guide on what type of demand profile China's going to provide going forward. Then we'll see the materialization of that demand, and then we'll likely see more upside. But I think the key point here is supplies are low, demand is above supply. Why? Inventories are declining, markets are backwardated, and what are we likely to see forward? More demand. As we come out of this mid-cycle pause in economic growth, we would expect to see more appreciation in demand. And the question is, how much supply do we get out of OPEC? They've already delayed it. It means they're likely behind. These markets are likely to remain tight, which puts more upward pressure on prices.
Do you think OPEC will have to continue to delay output hikes moving forward if the situation doesn't change?
I think they're waiting for the same thing the Chinese are waiting for. The Chinese are waiting to see what kind of stimulus do they need to do relative to the outcome in the U.S. Once you have that, the mix of their stimulus, then you know what type of demand growth you get. And then OPEC has some idea, how much supply they can bring on. Because, again, these are the level of uncertainty these markets face, whether if it's the situation with the U.S. in the election, because there's two very different paths there, but also the situation with Iran and Israel. Do we see a situation that, in a very short period of time where Saudi Arabia is replacing the output out of Iran? I don't think anybody can answer that right now.